Doing very well. It's been a very challenging few, I should say 20 months, but we're looking at our portfolios right now, and we are back to where we were in terms of calling them deep value portfolios if you give us a 5-year investment time horizon. I mean, we're seeing incredible values for the kinds of growth, the kind of growth that our portfolios are going to deliver. Yes, if you look at the blockchains, let's use the Bitcoin blockchain and Ethereum. What you'll find is they have the infrastructure, the technology has not skipped a beat throughout this entire crisis. In fact, the hash rate, Bitcoin's hash rate is at an all-time high, and that is a real indication of the security of the network. On Ethereum, we're seeing the total value staked at 24 billion. That is an all-time high. So we think the infrastructure is working beautifully. As far as Coinbase, this is an onshore regulated company and wanting to help shape regulations. Brian Armstrong, the CEO, and Alicia, CFO, have been leaning into what's going on right now and saying, okay, regulators, we need more clarity in order to protect investors. Those who wanted to get involved with certain types of crypto were forced offshore, and look at what's happened. So I think that Coinbase is going to come out here looking very, very strong. It just lost a very big competitor in FTX. No, I think it's more fear. I think many people say we don't know what we don't know. So what we do is we step back, put a little perspective into the situation here. And what do we have? So the entire crypto asset ecosystem is an $800 billion ecosystem. Apple is 3 times larger in terms of market cap. So that's some perspective. Many people are saying, well, okay, is this another Lehman? Could this be, could we see the domino effect here? I've just given you one reason why. The banking system back in 08, 09, trillions and trillions of dollars, and it was the global banking system. Right now we have, it seems, from FTX, $5 to $10 billion in creditors. As FTX has filed bankruptcy, they will be making claims. If you look at Lehman, that was $1.2 trillion in claims. So again, just trying to put perspective, this is fraud. This is Madoff. Madoff was $64 billion in claims. Again, FTX, 5 to 10 billion. Now, I know that crypto assets are, they attract a lot of attention. This is, the 3 revolutions we talk about all the time, a new monetary system in terms of the first global, private, meaning not government controlled, digital, rules-based monetary system. That's Bitcoin, a very big idea. DeFi is a very big idea. And while that has been thrown into question in terms of, shifting from one exchange to another, we've had a lot of shifting around. But I think DeFi, in terms of taking the middlemen out of financial services and making the ecosystem much more transparent with much less counterparty risk, is going to take off. It will continue to move forward, we believe. We always look for the whale in a situation like this. And if there was a whale out there, it was FTX and Sam Bankman-Fried, king of the hill. So I think we found the whale. And, I'm sure there's going to be more fallout, but we see how big the whale is. And yes, a lot of people have lost a lot of money around the crypto asset ecosystem losing value here. But if we're right on the underlying technology and the underlying roles that Bitcoin and Ether, Ethereum are going to play in this new world, then I think we're going to recover pretty quickly, more like Madoff. Yes, I had a Zoom. My team and I had a Zoom with Sam before that conference. I think they wanted to have us represented at the conference. And so I did give a presentation there, or I was on a panel. But other than that one phone call, just to set up, I have never talked to him. And, you know, he by the end of the phone call seemed to be distracted by whatever else he was doing. So that was my one exposure to him. And, you know, I think the thing that is shocking is how many people were very close to him. And one would have presumed, looked at all of the documents and got a sense of the books. The fact that so many people were completely fooled is quite shocking. You know, I think he had this aura around him or something that caused people to ask fewer questions than might otherwise have been the case. It's very hard to understand. Well, we know that the grayscale investment trusts are the most valuable part of that company right now, and they are they're cash cows. They're revenue generating. We do not think we think they're going to try and hold on to that, if nothing else. We're looking at a 41% discount of this trust relative to Bitcoin today. And so we actually think there's a lot of upside. Now, one of the things that we know that Grayscale and Michael Sonnenschein at Grayscale wanted was to convert this trust into an ETF.
Right.
I think what's happened with the fallout here might increase the probability that a Bitcoin ETF will be approved. I'm not saying immediately, but we know that, and even the newest SEC commissioner, Jaime Lizarraga, I think is his name, has come out and said, we need as regulators to focus on decentralization and transparency. What is the most decentralized and transparent crypto asset in the world? It is Bitcoin. And yet retail investors do not have easy access through a liquid asset like an ETF, which honestly, I don't understand, given that they approved a Bitcoin futures fund. So, you know, I think it might increase the odds. We shall see. Well, it is one of the few securities. We have to own securities in ETFs. So it is one of the few securities we can buy. And yes, it's at a very big discount. So it is more attractive. Bitcoin, if they were to even liquidate it, you know, we've got such a big discount relative to Bitcoin that again, we don't think they're going to. This is the most valuable property. I think they're going to hang on to it. And I think over time, the discount will close. Don't know if it's because of a conversion to a Bitcoin ETF. I'm sure the regulators will take a very close look at DCG and the Grayscale Bitcoin Investment Trust, but we do know this is a grantor trust, highly regulated. I mean, we had to do our homework on it. And we know that all of the Bitcoin behind GBTC is in cold storage at Coinbase, and Coinbase has confirmed this. You know, we feel quite comfortable with it here. Well, again, for our ETFs, we, as you mentioned, own Coinbase. We also own Square. And it is interesting that Jack Dorsey has chosen the most transparent, most decentralized crypto asset to center Block's crypto exposure to. And I realize he's trying to, from a developer community point of view, leave them on their own. But we do think Bitcoin, and you can see through the behavior of the infrastructure, hasn't skipped a beat, not one beat, more secure than it was yesterday, the day before, and the day before. So I have a feeling this is going to elevate Bitcoin in the eyes of not only the crypto world, but the investment world at large. And I have a feeling it's going to have more running room through the rest of the world. I think this is the way that this is Block's go-to-market to get into the rest of the world. And we think they're going to be very successful. So, yes, and you can, sometimes you need to battle test. You need to go through crises to see who the real, to see the survivors, first of all, but really to battle test the infrastructure and the thesis. And again, we think Bitcoin is coming out of this smelling like a rose because of what I have mentioned previously. And I do think the one thing that will be delayed is perhaps institutions stepping back and just saying, okay, do we really understand this? And once they actually do the homework and see what's happened here, I think they might be more comfortable moving into Bitcoin and perhaps Ether as a first stop, because they'll understand it more. Yes. Yes, we do. We owned Twitter for quite a while, and we sold it into the rumors that Elon was going to buy it because we knew there would be a lot of controversy around that. So it moved into the 60s. I think it got to 70, and we sold there and have been watching from the sidelines. But if you look at that model longer run, it has not delivered on the promise. And I think opening up the algorithms, which we think he will do, and taking away the kind of human-driven censorship and allowing the transparency of the algorithms that they do put out there, allowing people to question them, I think is going to be very healthy. If you look at the daily average users, I think the various metrics that you can count daily, they have been going up dramatically. So, I know a lot of people who basically decided to quit Twitter because they didn't like the kind of censorship and so forth that was going on. So I actually like what he's doing. Well, I do think that this is not just an advertising vehicle. In fact, that probably might diminish quite significantly in terms of its importance longer run. You'll remember that Elon started his entrepreneurial pursuits with a precursor to PayPal. So he, a very long time ago, had this idea of a digital wallet, a super app like WhatsApp in mind. And of course, took a big detour into another passion of his. We know he knows a lot about this world. And I think if anyone in the U.S. can do this, I think he can. I think he'll surround himself by the right business leaders. He's not going to do this himself. If you look at Tesla, he's not, if you look at, many people say, aren't you worried about Tesla? No, we're not, because of our work on electric vehicles. They are grabbing a disproportionate share, and will continue to do so, of a market that we think by 2027 will account for 85 to 95% of all cars sold in the world. So that's on automatic pilot. He's now working on autonomous, which we think is going to work. In fact, I just had the pleasure of riding in a cruise car in San Francisco, an autonomous car.
A GM.
Proof of concept. A GM. Just wanted to check it out. And I have to tell you, I love the ride. And I know autonomous is possible because Cruise and Waymo are doing it. And we think Tesla is going to do it in a much bigger way. So that's Tesla. But onto Twitter, it really needed to be shaken up. And I do think about the amount of data that Twitter has. And it's proprietary data And think about the combination of that and artificial intelligence. Remember, he has AI expertise and experts. I know he brought in some of his engineers, and they are going to, I think, surprise and delight, heading for a super app kind of product. And, by our estimates, and you'll find this in our big ideas, I think it was 2021, the value of each customer in a digital wallet should be, and when I say that, the market cap associated should be in the 20,000 plus range, because it's not just for financial services. It'll ultimately be for commerce, and AI is the glue that's going to pull this all together. And the data that they have, the data is the new oil. You've heard that. This is absolutely true in the case of Twitter. It's been, and yes, we speak from experience. This is an extremely productive social network for us. It is our most productive. And, it truly is the global public town square. I can write an open letter to the Fed and put it out over Twitter. Now, do I think the Fed's going to listen to me? No, I don't. But that they may listen, the Fed board members may listen to someone who might think that I have something to say, which is simply a question. Wait a minute. How can you be unanimous 75 basis points at a time? How can you be unanimous when there is so much conflicting data out there, including an inverted yield curve now at 75 basis points? That's crazy. I think we're going to look back in history and say, what were they thinking? Unanimous? Commodity prices are falling. You've got excess inventories all over the place. We're seeing massive discounting. I think we're going to see deflation, and then they'll make a move in the opposite direction. But we need a steadier hand than that. I think we're seeing it. I think if you look at a lot of commodity prices, not only are they down 30 to some of them 80% from their peaks, they're down on a year-over-year basis. In fact, oil itself is almost down on a year-over-year basis now. The big pushbacks on this call we get are wages and rents. We're seeing rent inflation reverse quite suddenly and dramatically. So what I think we will look back in history and say, this inflation shock was the function of a supply shock caused by COVID, supply chain problems afterwards, and even more problems after Russia's invasion of Ukraine. If I can just take 1 second, I would like to give an analogy to the late 19 teens. We were in the middle of the massive, most massive innovation the history of the world had seen: telephone, electricity, and automobile, all at the same time. But we had World War I, and we had the Spanish flu. Sound familiar? Now, that was much worse than what we've gone through. We've gone through nothing like that. But there were massive supply chain problems back then. And inflation peaked at 24%, right? In June of 1920, and by June of 1921, it was minus 15%. So I think that our 8 to 10% inflation, which is where it was at the peak, is going to turn around, and we're going to see some very big surprises on the inflation front. And you know who agrees with us? The bond market. Look at what the bond market is doing now. The long bond yield, 380, 75% inverted. That's telling us that the bond market is saying recession and or big surprises on the low side of inflation expectations. And it's probably both. Yes, well, AllianceBernstein, I believe, got the first fully active, fully transparent ETF in, I think it was early, it got it was approved in early 2013. So that's when I put my hand up and said, I'll do that. And there was a belief that ETFs were not safe, or there were a lot of arguments against it. Right. Probably the biggest one was mutual funds, which are much more profitable. I would say the economics there are higher than ETFs. How does it make me feel? I'm The more the merrier. I think this is a fantastic wrapper for the end consumer. It's fully liquid, unlike mutual funds. You have to wait till the end of the day. Transparent, fully transparent. That's what investors want. It is more tax effective, much more tax effective. We're seeing mutual funds that are down 30% this year,
right,
but they're slapping their investors with 35% in capital tax gains. And then finally, it's more cost effective because all of what you see is what you get with these fees. There aren't a bunch of hidden fees. So it's a great wrapper for the end consumer. I highly recommend it. And we're happy that they are seeing the light now.